Dear students, welcome to digital learning. Today we will begin next chapter, that is the last chapter in financial accounting 6 of 6th semester BCom of Bangalore University, that is final accounts of banking companies. Here we will discuss about the meaning and definition, format of the final accounts, important items in the final accounts of banking company. Meaning and definition of bank. Section 5, subsection B of the Banking Regulation Act 1949 defines banking as accepting for the purpose of lending or investment of deposits of money from the public, repayable on demand or otherwise, and withdrawals by check, draft, order or otherwise. This is the meaning of banking. Section 5, subsection C of the Act defines banking company as any company which transacts the business of banking in India. Next, we will see, this is the definition which we have studied. Now we will see about the final accounts. This is the format of the final accounts according to the Act. Revised format is given. This is found in the third schedule, section 29 of the Act. Form of the balance sheet is like this. Balance sheet of, here enter the name of the banking company. Banking company ಹೆಸರು ಬರೀಬೇಕು. Balance sheet as on 31st March. You should fill it with the year. Then it should be in thousands. 3 zeros are omitted. Thousands omitted. So here capital and liabilities schedule as on 31st March year, as on 31st March year, that is, this is current year, this is previous year. If 2021 is the current year, 21 is the current year, 2020 is the previous year. If the 2021 is the current year, 2020 is the previous year. Okay, like that. So items you see, capital. Under capital, reserves and surplus. Under the capital and liabilities, first item is capital, that is schedule 1. Schedule 2 is reserves and surplus. Schedule 3 is deposits. Schedule 4 borrowings. Schedule 5 other liabilities and provisions. Then total of the capital and liabilities. Then assets, cash and balances with Reserve Bank of India 6. Schedule 6. Balances with bank and money at call and short notice. Schedule 7. Investments schedule 8. Advances schedule 9. Fixed assets schedule 10. Other assets schedule 11. Total of the assets. Then we have, after the total, contingent liabilities and bill for collection. For bill for collection, there is a schedule, that is schedule number 12. Next, under in the final account, next format is revised format for profit and loss account. Form of, this is the form B. This is form A. You see, balance sheet is form A. Profit and loss account is form B. Form of profit and loss account for the year ended 31st March. Fill it with the years in thousands. Okay. Sorry, thousands are omitted, means we should, if it is here 14, it means 14,000. Okay. Like that, the amounts are written here. So again, format is schedule number, year ended, current year, year ended, previous year. So first item is income. Under the income, you have schedule number 13, income earned, other income schedule number 14. Next item is expenditure. So then you write the total of the income. Then second Roman number 2, expenditure, 2 schedules and 1 item without schedule. 15th schedule is interest expended. 16th schedule is operating expenses, then provisions and contingencies, then total of the expenditure. Then profit or loss, third Roman number 3. Net profit or loss for the year. Profit or loss brought forward, means this is for the current year, this is the old balance sheet, old profit or last year's profit carried or brought forward. So then total. Then this is profit or loss is income minus expenditure. Okay, this total minus this total. Then here you write the total of the current year profit and old profit brought forward. Then for Roman number 4 is appropriation, that is statutory transfer to statutory reserve, transfer to other reserves, transfer to government or proposed dividends, balance carried over to balance sheet. Then again write the total here. So this is the format we should follow. So we have schedules from 1 starting in the balance sheet to 16. 16 schedules are there. Then some important terms, items or terms which are used in the final accounts. First one is balances with bank and money at call and short notice. So this includes interbank call money at short notice. Under this head, money is borrowed by one bank from another. Naturally, the bank having surplus money advances such loans to bank having short supply of money. These transactions are transacted with the help of brokers who charge brokerage usually at 0.5% from both the banks. So that is the item included in the balances with bank and money at call and short notice. Then while the money at call is refundable at 24 hours notice, money at short notice is refundable at 7 days notice only. That is the difference between money at call and money at short notice. 24 hours notice and 7 days notice. Next, second one, non-performing assets or NPA. NPA means a credit facility in respect of which interest and principal is in arrears for more than 90 days. ಇಂಟ್ರೆಸ್ಟ್ ಮತ್ತು ಅದರ ಅಸಲು ಮತ್ತು ಬಡ್ಡಿ ಒಟ್ಟು ಸೇರಿ 90 ದಿನಗಳಿಗಿಂತ ಹೆಚ್ಚು ಬಾಕಿ ಇದ್ರೆ ಅರಿಯರ್ಸ್ ಇದ್ರೆ ಅದಕ್ಕೆ NPA ಅಂತ ಇರ್ತೇವೆ. Third one, asset classifications. We have standard assets, that is performing asset, do not disclose any problem. Substandard assets, NPA, for a period not exceeding 1 year. ಒಂದು ವರ್ಷದ ಒಳಗಿನ NPA ಇದ್ರೆ ಅದು substandard assets. Doubtful assets, remained NPA for a period of 1 year. If the asset become non-performing asset for 1 year, it is doubtful asset. Loss assets, where the loss on an asset has been identified by bank or internal auditor or RBI inspector, but the amount has not been written off wholly or partly as loss asset. So loss on asset is identified by the bank or internal auditor or RBI inspector, but it is not written off. Such assets are called loss assets. CRR and SLR, cash reserve ratio and statutory liquidity ratio. Section 24 of BRA requires, Banking Regulation Act requires, that every banking shall maintain in cash, gold or approved securities an amount as notified from time to time by RBI. These are popularly known as CRR and SLR. So these are the different terms which related to the banking companies and also which has relation with the final accounts of the banking companies. Thank you for listening to the class. By this we have completed the theoretical part of this chapter. Next we will solve few problems in the future video. Thank you.